Good morning, everyone. How are you all? Good morning, sir. A very good morning to you all. So, let's start this session. We'll try to complete the session as soon as possible. Definitely, we'll concentrate on clearing our concept on the topics we are supposed to discuss. Can you remember what we discussed in our last session?
So the adjusted trial balance.
We prepared the adjusted trial balance. And what is the objective of preparing adjusted trial balance? Why do we need to prepare the adjusted trial balance?
To rectify all the errors.
To adjust all the amounts that is necessary. Why do you need to adjust all those information or accounts?
To get a fair and right value of the
All right.
income statement and balance sheet.
Exactly. So basically, to get the fair value of the financial statements that we have prepared, that in the financial statements we prepared income statement, balance sheet, owner security statement, etc., etc. And objective of in prepare income statement is to identify the profit or loss of the organization. Objective of balance sheet is to know the financial condition of the organization, what is the total asset, liabilities, and owner security on a particular date. So these informations will be correct if all the necessary information that we already have recorded and summarized, these are correct for a specific duration, specific time period. That's why when we prepare trial balance or after preparing trial balance, when we take the initiativeness to prepare the financial statements, we may found that there are some information that need to be adjusted, that is included into the trial balance and need to be adjusted to find out the actual amount of expense, revenues, assets, and liabilities. And there might be some information which has not been recorded yet, so we have to record it newly through the general journal, even though we mentioned it as an adjusting entries. So after that adjustment, we need to prepare another trial balance that is known as adjusted trial balance. And the objectives of preparing adjusted trial balance is that if you prepare the adjusted trial balance, the information included into the adjusted trial balance will actually show you the actual expense, revenue, assets, liability, and owner security position. And from that situations, we can easily prepare the financial statement. So in this session, again, we'll see how can we do some adjustment just for your practice purpose. We'll see how can we prepare an adjusted trial balance as we have already been done. And from the adjusted trial balance, what might be the next steps we can proceed. So I have taken an example from your book. That's why I took 10 more minutes from you, even though we are supposed to start at 10:30. I transferred this information into the Excel sheet. It will be available. So this is a problem. I have collected it from your book. This is from chapter 4. Chapter 3 and 4 are both are interrelated. Uh, this is problem number P4A 1A. It said that financial statements, the trial balance column, basically it's better to say the trial balance columns of the worksheet of Warren, Rofi, and G at March 31st are given below. So this is the trial balance of this organization has been given to us. So these are the trial balance information, and then they mention some other information. A physical count reveals only 480 of roofing supplies on hand. Depreciation for March is 250. Earned revenues amounted to $60 at March 30, and accrued salaries $700. So these are the additional information given after preparing the trial balance. It indicates that uh, we need to do some adjustment with the information or additional information that has been given to us. So, but what is the first steps of doing adjustment? We need to find out duration of accounting period. Can you help me to figure out what should be the duration of accounting period?
1 year.
1 year. How do you measure it?
12 months.
Okay. How? Why do you think it's a 12 months period?
It started on March 31, 2020 and ended on March 31,
uh, ended started on, sorry sir, can you please repeat?
So it can be 3 months.
Okay, why do you think it's a 3 months?
So January to March.
So why do you think it's a 3 months duration? We need to find out the reason. If you can find out the reason, it will be easy for you to identify the accounting period. All right. uh,
I think it's not mentioned when it started.
okay, it's not mentioned how it started according to your version. So if it is not mentioned, so what should we assume?
So it's 1 year. We have to assume it 1 year.
Okay, that is one point, is that if nothing mentioned, of if no indication has been given, then we'll consider that the duration of accounting period is 1 year definitely. Secondly, one of your friends said that 3 months. If we can consider 3 months, if it the indication has been given that this organization follow the calendar year start from January to December, then if they mention that this organization follow the calendar year and they have prepared this trial balance on March 31, then we can say that okay, they, because they follow the calendar year, they starts on January, February, March, this is the 3 months, then we can consider. But they did not mention anything about the calendar year, so it's not a 3 months period. And they did not mention. Okay, now let's see. One indication has been given, not into this first line, but here. If you notice this line, what did they mention?
For the month ended March
For the month ended. So what is the duration? So this trial balance is
1.
prepared one
1 year.
month ended. Can you remember? Probably in the second session I have mentioned about this.
March 1.
They have started on March 1. That means this trial balance is prepared for 1 month. If it is for year ended, what did they mention? For the
Yes, sir.
yes, for the
ER
year
ended.
ended. If it is a 3 months period, then they will mention for the 3 month ended or quarter ended, like that. So if this line is been given, and from this line we can also find out what is the duration of the accounting period. So some clues can be given. So you have to be careful on that issue, that somewhere the duration can be given. Say nothing is mentioned, for example, nothing is mentioned here. They just mentioned that March 31st, this is the trial balance, and at the end in the additional information they mentioned that depreciation for March. So this depreciation is being given for how many months?
1 month.
1 month. Then we have to consider that this is the trial balance as they have prepared for a 1 month. So somewhere some clue can be given. So we have to be careful on this on the problems that has been given, whether there is any information has been given there regarding the, or any clue has been given there regarding the accounting period. So we have to have a look on the question first to find out the duration first. So from the problem that has been given, we now can identify that the duration of accounting period is 1 month. So this is the trial balance they have given to us. Now these are the additional informations they are also given to us. Now we are supposed to do the necessary adjustment. So these adjustments will be done by you. I will just write it down. First one, physical count reveals only 480 roofing supplies on hand. Is there any roofing supplies account or supplies
Yes,
account?
sir.
Yes, we have a supplies account. So can you help me with the working? First one, there is a supplies in the trial balance with an amount of 2000. This is given into the trial balance. So how should we handle it? On hand means
Sir, unused.
unused. So they have given the information for how much is unused. So another portion will be used. Am I right? Yeah. So one portion is unused, another portion is used. So unused information, how much?
480.
80. So what should be the used portion?
2000 minus 400.
2000 minus
1520.
1520. Thank you. So now we need to do the adjustment. This unused is basically what? What types of, what category?
Yes, sir.
It's an asset. And used
Sir, expense.
expense. How? Yeah, consumed. How is it been recorded? Supplies, they have recorded as supplies. So supplies is what type?
Asset.
Asset. So asset has been recorded by 2000. What should be the amount of asset into the trial balance?
1520.
Is it 1520? But you identified it should be 480. It should be
Sir, but the 480 is unused.
480 is used.
Oh,
Okay, 480. That's why this summary has been done. If you do this summary, it is very easy to you.
okay.
Okay, in the trial balance, they recorded as asset. How much asset has been recorded?
2000.
2000. How much the asset should be?
480.
480. So we need to make it 480. How can we make it 480? If you reduce this asset by 1520. Am I right? If you reduce this asset by 1520, then it will become 480. That is the calculation. And on the other hand, this expense should be, what should be the title of this expense?
Supplies expense.
Supplies expense. Have we recorded this expense? Have not yet. We have not recorded this expense yet. Now we have to record this expense. So we have to handle these two accounts. One is we need to record the supplies expense, and we have to reduce the supplies. Supplies is an what category?
Asset.
Asset. Asset need to be reduced. If asset reduce, it should be credit. So asset credit, supplies credit by how much?
So 1520.
1520. Another account.
Keeping supplies. Keeping supplies.
Let me finish this one. Let me finish this one.
Yes,
Okay. And what is another account?
the supplies expense.
Supplies expense. We have not recorded it yet. Now we have to record it. That means expense is increasing. Now, if expense increase, it should be debit. So our journal should be supplies expense debit, supplies credit. This is how we have to do the adjustment. Just if you can work out with this calculation, then everything is very easy to you. You have to look at how it has been recorded into the trial balance, what should be the balance, make that balance. If you may need to increase it, may need to decrease it. That is our adjustment amount, and remaining adjustment is for supplies expense. Roofing supplies means probably they these organizations provide some roofing service. They repair the roof, something like that. And to repair the roof, they need some materials as well as an instrument or something else. And this becomes a supplies for them. That is called roofing supplies. It depends on the nature of the organization. That is basically roofing. Is it clear for the first one?
Yes, sir.
Okay. Second one, depreciation for March. It's very easy. We did not record it yet. Now we have to record it. What is the journal for depreciation? What is the journal? Its journal is same for depreciation.
So depreciation
expense and accumulated depreciation.
Thank you, sir. Depreciation, expense, and do you need to look into the trial balance whether this for this one? Do you need to look at into the trial balance whether there is any account regarding depreciation or not? Hmm?
No, sir. They gave
No,
the
no. Reason is that if you can remember, uh, this session, maybe on the previous session, in the first session, earlier, the second session of adjustment. What are the different types of adjusting entries? Can you remember? What are the different types of adjusting entries?
Accrued expense, accrued
Exact,
revenue.
exactly. Accrued expense, accrued revenue, prepaid expense, prepaid revenue. Accrued expense and accrued revenue means it's a general journal. This information, this transaction is incurred, but we did not record it. So if it is related to the accrued information, you don't have to look at into the trial balance for the adjustment. But if it is relates to the prepayment or pre-receive, then we have to look at the trial balance, what is been recorded here and how much we need to adjust it with the trial balance information. That is this is the very basic thing. And this is the depreciation. Each year we have to record this depreciation, or each accounting period we have to record this depreciation. They did not record it yet, now have to record it. It's an accrual basis of adjustment. That's why we don't have to look at to the trial balance. All right. So this is depreciation expense and accumulated depreciation. They mentioned that depreciation for March is 250. So 250 is the amount of depreciation.
Sir,
Yes, sir.
I'm confused. Why do we not need to create a depreciation expense account on the trial balance?
We have to create it, but we don't have to look at into the trial balance during the adjustment. Say when we did the adjustment for the supplies, what we need to do? We have to look at whether there is any supplies account or not, isn't it? But for recording the depreciation, we don't have to look at into the trial balance because it's a new depreciation. We have not recorded it yet. Now this amount is being recorded. Have you got it, sir?
Yes, sir.
Number 3, unearned revenue amounted to 60 at March 31. Is there any unearned revenue account into the trial balance? Yes,
yes, sir.
unearned service revenue. So there is an account of unearned service revenue. We'll follow the same procedure. Unearned service revenue, how much is it?
So 550.
550. So unearned service revenue is being recorded into the trial balance. What types of account is it?
It's a
Liability. Yeah, it's a liability. Excellent. So when you prepared the trial balance, you had a liability regarding the unearned service revenue with an amount of 550. Now they mentioned that unearned revenue amounted to $60 at March 31. Can anyone help me to adjust this amount? What does it mean? Unearned revenue, that means unearned service revenue, amounted to $60 at March 31.
So what does the word amounted mean here?
Amounted means unearned service revenue. On March 31st, the amount of unearned service revenue is $260.
No, sir. This is the balance.
This is the balance. Exactly. This is the balance. It can be said like that. Unearned service revenue remains 260. Same thing. The balance of unearned service revenue on March 31st, 260. Same thing. So they can use different language to explain the situation. So we have to understand their language as well. So as your friend says, unearned service revenue, the balance of unearned service revenue is $260 at March 31. We have to reduce by
260.
okay. So what should be the uh, it, this is remains
So does it mean by leftover
leftover?
liability is
Yes,
$260?
exactly. Leftover liability is $260.
260.
Leftover or remaining liability 260. So what happened with the difference 290? What happens with that?
So they provided the service of $290 already.
Exactly. So if you provide the service, it means earned, is it?
Yes,
Yes.
And it will be
Revenue.
revenue. It will be a revenue. So what should be the adjustment? Unearned service revenue is a liability. In the trial balance, it is recorded by 550, but it should be 260. How can we make it 260?
So we provide the service.
Yeah, how can we make this 550 to 260? What we did? This is the adjusted amount. So what should be the adjusted amount here?
Adjusted amount should be 290.
290. Need to be reduced. So we need to reduce this unearned service revenue by 290 to make it 260. That means liability will be reduced by 290. That is our adjustment here. And on the other hand, we said that this 290 has been earned. That's why it should be recorded as a revenue. What should be the title of the revenue?
Service revenue.
Service revenue. Service revenue. Now, what should be the adjusting entry? Liability reduced. If liability reduced, debit, credit, no? Debit. Unearned service revenue, debit, and
Service revenue.
service credit. Amount 290. So try to understand that calculation. If it is understandable to you, then everything is very easy. Last one, very easy. Accrued salary is 700. What does the accrued means? Unpaid. That means salary is incurred but not paid. It's a general journal. We did not record it yet. Help me.
So salary debit,
Salary
salary
expense.
payable.
Exactly. Yeah. And if you notice, you can see that they mention salaries and wages expense. If you can remember, we mentioned in the last session, if any account is already been created by the organization, we have to follow that title. So salaries and wages expense, debit 700, salaries and wages payable, credit 700. So this is how we will do the adjustment. That is the process of doing adjustment. Is that okay, sir?
Yes, sir.
In our last sessions, after that, what we did? After preparing the adjusting entries, what was the next steps we did, or what we
Adjusted trial balance.
adjusted trial balance? We have to prepare the adjusted trial balance, and we have seen we can directly prepare the adjusted trial balance. General processes, we need to transfer it to the laser, then from the lasers we need to prepare the adjusted trial balance. But in the previous sessions we also have seen how can we prepare the adjusted trial balance directly by a statement.
Sir, I have a question.
Yes sir. Yeah, one by one please.
Sir, for the exam, when we are told to create an adjusted trial balance, do
Hmm.
we just do our workings and then directly create the trial balance, or do we have to show the ledgers as well?
No, you don't have to show the ledgers. You will not get that much time to prepare the laser. That's why I'm showing this calculation. It is easier to prepare the adjusted trial balance if it is been asked. If you just follow that statement, that will be enough. Okay, this is the trial balance information. Then we'll show the. Yes
What
sir.
is accrued salaries?
Anyone can help your friend? But
Unpaid salaries.
The salaries which are not given.
yes, unpaid salary or the salaries which is not been given. That means you already got the service from your employee, but you have not provided the uh, amount yet. That is known as accrued salary.
Um, Sir, are there any other examples of the term accrued?
Unpaid, unpaid can be used.
It's the opposite of prepaid. Okay.
Opposite of prepaid. Yeah, prepayments you already paid it in advance, and unpaid means you're supposed to pay it, you haven't paid it yet. The three
How
seat.
about this miscellaneous expense?
Sorry. Oh, miscellaneous expense. Yes, I am supposed to discuss that. Say in an organization, you may find that there are a couple of expenditures incurred. Whenever any expenditures incurred, we have to mention it. Say salaries expense, wages expense, utilities expense, etc., like that. But there are many expenses that are very small in amount. Say you have spent 100 taka uh, for consuming tea. It's also an expense for the organization. Now, uh, if you want to record those types of expense with their own title, so what will happen? There will be a couple of or hundreds of accounts that will be very difficult to handle, and this is why it has been suggested that if the amount is very low and if it does not have any impact when you are preparing the financial statement, you don't have to create that information with a separate account. Record all of such accounts into a single account that is really known as miscellaneous expense account. Okay.
Okay, sir. Yes, sir.
All right sir. So we have seen that they have given us a trial balance. They have given us a trial balance, and we'll mention it. Okay, I'll let you know later on. They have given us a trial balance and with some additional information, and from the additional information we have prepared our adjusting entries. Let me sort it down, these adjusting entries, it will help us. So these are the adjusting entries. These are the adjusting entries we have prepared from the informations that has been given to us. Now we are going to transfer these adjusting entries to this adjustment column, and from this adjustment we will prepare the adjusted trial balance. Okay, help me for the first one. Supplies expense was debited. Supplies expense was debited. What to do?
So here is the supplies. We need to
There is a supplies account. Is there any supplies expense account?
expense. Sorry, sir. No, sir.
No. So we have to
We
create
need
it.
to create.
We have to create it. So supplies expense. So supplies expense need to be supplies expense. It will be directly affect to the adjustment columns. It was debited, so in the adjustment we will debit it by 1520. 1520. Then supplies credit. Help me.
Here is the supplies.
There is a supplies account. So in the credit column of the adjustment, 1520. Then depreciation expense and accumulated depreciation. We have to create both of account because none of them are here. So depreciation expense, accumulated depreciation. So depreciation expense was 250, accumulated depreciation 250.
But sir, there is
Oh, sorry. Yeah. There is an accumulated. Yeah, exactly. Thank you so much, sir. Thank you so much. There is already an accumulated depreciation account. So accumulated depreciation 250. Thank you so much, sir. Oh, it's
So
here.
if there is any depreciation account, sir, do I
Then
need to
no,
create any depreciation expense account?
no. If the depreciation expense account is already or any account is already been into the trial balance and or already created, you don't have to create it newly.
So if it's right on like only depreciation,
The same thing. Yeah, same thing.
then expense.
Expense. Yeah, expense. Then unearned service revenue and service revenue. There is an unearned service revenue and service revenue. Both accounts are available here, so we don't have to create any new account. So unearned service revenue was debited by 290. Service revenue was credited by 290. Salaries and wages expense, salaries and wages payable.
To create a salaries and wages payable account.
We just need to create a salaries and wages payable because salaries and wages expense are is already here. So salaries and wages expense was 700. Salaries and wages payable 700. So this is how we will transfer information to the adjustment column for this statement. And another things we actually need to do, that is uh, we need to find out what is the total of each columns to find out the arithmetical accuracy. So into the trial balance. Now after the adjustments, we now can see that in the adjustment columns 2760 is the total amount, which is same for the debit and credit columns. This one. That means indicates that we have correctly transferred the all the information here. Now we need to prepare the adjusted trial balance. So there was no adjustment regarding cash, so cash will be debited. Cash was debited, that's why in the debit column 4500. There was no adjustments regarding the accounts receivable. So 3200. This one supplies. What to do?
Sir,
Deduct
2000 minus
Deduct
15,020 from
1500.
Yeah,
480 debit.
2000 minus 1520. One was debit, one was credit, so different amounts need to be created. We need considered. And which side?
sir
Sir,
debit.
debit.
Davis. How much? 480. Is it?
Yes, sir.
480. Thank you, sir. Equipment, no adjustment. It was debit, so into the debit column. Accumulated depreciation.
Sir, it should be 1000 credit.
Why 1000?
No, sir. Credit
1,500
1500.
1250 credit. 1250 credit. Again credited by 250.
Oh,
So
should we add them up?
yes, we should add them up. It means that if debit and debit, we have to add it
And credit, we have to add it as well.
as well. Yeah, exactly. We have to add it. If credit and credit, again we have to add it. If one debit and one credit either sides, we need to deduct and need to consider the balance whichever is higher. That's the rules we have followed into the ledger, and the same concepts need to be applied here. Basically it's a summarized ledger, and from the ledgers we will try to find out what should be the balance that has been transferring here. So for this situation, accumulated depreciation 1250 was credit, again credited by 250, so we have to add it 1500. Accounts payable credit 2500, there was no adjustment. 2500. Unearned service revenue
260.
550 was credit balance, then it was debited, that means reduced. So remaining will be the debit balance or credit balance?
Credit.
Credit balance, because credit is higher. And the amount is 260. 260. Owner's capital 12,900 credit. Owner's drawings 1100 debit. Service revenue
6,590.
6590 credit. Thank you, sir. 6590 credit. Both are credited, that's why you have credited. Salaries and wages 2000 debit. Miscellaneous expense 400 debit. Supplies expense, it was adjusted amount, so it was debited 1520 debit. Depreciation expense 250 was debited in the adjustment, so directly 250 will be debited. Salaries and wages 700 was payable, 700 was credited, so we'll credit this. Now you can see the both sides are same after preparing the adjusted trial balance. So this is how we can prepare the adjusted trial balance. Is that okay? It's nothing, just the calculation, showing all the calculation in a single statement. Is that okay? Okay. Now, what is the objective of preparing adjusting entry? What is the next step after preparing the adjusted trial balance?
So we need to create income statement,
Uh,
balance sheet.
balance sheet. We can prepare income statement, financial statement. Exactly. Now, here in this statement, we can also prepare a summarized financial statement. Now you can see it here. In the summarized financial statement, we'll prepare only income statement and balance sheet. Oh, what? balance sheet. This is nothing, just to transfer the information based on its category. In the income statement, what types of accounts will be transferred?
So services and expenses,
Revenue and expenses.
revenue and
Exactly, revenue and expenses. And in the balance sheet, all other accounts will be transferred.
asset liability.
Yeah. So what we'll do, the best way is to find out the category first. Say for example, let us do it in a very simple way. Now help me to find out the category of each account. Cash, cash,
Asset.
asset. Accounts receivable, asset. Supplies,
Asset.
equipment, asset. Accumulated depreciation,
Conferences.
it's a contract. We will discuss about this. Hmm. Contra entry for what? For the asset, fixed asset. Accounts payable,
Liability.
liability. Unearned service revenue, liability as well. Owner's capital, owner's equity. Owner's drawings is a part of
Owner's
owner's equity. Service revenue, revenue. Salaries and wages expense,
expense.
expense. Miscellaneous expense, expense. Supplies
What is miscellaneous?
I already explained. I'll explain it later on again. Supplies, depreciation, salaries and wages payable,
Liability.
liability. So we identified all the categories of all the accounts that already been created for this example. Now what we are going to do, all the expense and revenues will transfer to the income statement according to their balance, and all other accounts will be transferred to the balance sheet according to their balance. Then summarized income statement and summarized balance sheet will be prepared. Let's see. Cash, you identified it's an asset. What should I transfer? Balance sheet.
Balance sheet.
Which balance? Trial balance,
Debit.
trial balance information, adjusted information, or adjusted trial,
Adjusted.
adjusted trial balance information. Three situation: trial balance, adjustment, and adjusted trial balance. So whatever information we are going to transfer to the income statement and balance sheet, the informations of the adjusted trial balance will be transferred, not the previous ones. Okay. So cash is an asset, should be transferred to the balance sheet. Cash was debit balance, we'll transfer it to the debit side. Accounts receivable, asset in the balance sheet, 3200. Supplies, asset. How much? 480. We looked at only the adjusted trial balance information.
So
Equipment,
when will we consider supplies and expense?
supplies expense has been created here.
Oh, it will be mentioned, right?
Yeah.
Like
Equipment, 11,000. Assets. Accumulated depreciation for the equipment, it was a credit balance. We'll transfer it to the credit side of the balance sheet. Okay. So what should be the amount? 1500 credit. It's not revenue, it's not an expense, it's a contra account of the asset. That's why revenue and expense will be transferred to the income statement. All other information will be transferred to the balance sheet. Accounts payable, liability into the balance sheet. Unearned service revenue,
Sir, income statement.
what types of account you identified? Liability. That's why I categorized it first. If you categorize it first, it will be very easy to you. So liability should be transferred to balance sheet. How much? 260. Credit balance 260. Owner's capital, what did I say? Only revenue and expense will be transferred to the income statement. All other information to the balance sheet. 12,900. Yeah. Actually, it should be gone to the owner security statement because we are not preparing the owner security statement here. That's why it should be transferred to the balance sheet. Owner's drawings in the balance sheet. Debit. Service revenue, income statement, credit 6590. Salaries and wages
So balance sheet.
into the
Oh, sorry, sorry. Into the
income statement. How much? Debit 2000. Miscellaneous expense,
It will go to the income statement.
income statement. Exactly. Supplies expense, again it's an
Income statement.
income statement 1520. Depreciation, it's an expense, again income statement. Salaries and wages payable,
so balance sheet.
balance sheet, like that. So we transferred all the necessary information that is available to us. Now what to do? Let us make a subtotal here. This is the income statement. This is the income statement. And in the income statement, we now want to see what is the total of the debit column and what is the total of credit column. So this is an income statement. In the income statement, debit column shows they have a total of 4170 and credit shows 6590. What does this 4170 means? Is it cash inflow?
So outflow.
What expense? This is the total expense. Can I say this is the total expense for the organization? The total expense of the organization is 4170. Can I say like that? And what about this credit balance 6590? Total revenue, isn't it? This is the total revenue. So now another objective, we know that whenever we prepare debit a statement like with the debit and credit column, we have to equalize the both side. That is the objective. So the highest one should be record because to make the total 6590, it should be like that. To equalize the both side, how much we should add here? Total debit is 4170. Yeah, the difference between these two, isn't it? Difference between these two. So if you add 2420 here, then the both sides will be same. Debit and credit will be same.
Sir, why should we add 2420?
Because our objective is whenever we prepare a such statement with the debit and credit column, these two columns need to be equalized.
Sir, but if it's not equalized in the income statement, then what does that mean? Do we always
I
have to add
I'm going to explain it. That's why I'm going step by step. Okay. Now, uh, I just mentioned that we have to equalize the both sides. What's the reasons behind it? Or we are equalizing the both sides with the difference between these two, and we found that the difference is 2420. Now, question is, what does this 2420 mean?
The profit.
Profit. This is the revenue. This is the expense. The difference between revenue and expense is what?
Profit.
Net profit. Basically, we try to identify the profit or loss in that situation. The difference will be considered as an net profit, and if you adjust this net profit, then the both sides will be same. Have you understood why I explain this like this way? Just to make it easy to you, that firstly you have to keep in mind that both sides needs to be equal, and to make it equal, what we need to do, we need to find out the difference of both sides, and we have to record this. And basically the difference is basically the difference of revenue and expenses, which actually known as revenue, profit or loss. Here revenue is higher than the expenses, that's why it's a profit. Have you got it? Is it clear, or should I explain it in another way? Anyone have any confusion?
So there has been an increase in accumulated depreciation. So shouldn't be this amount adjusted in the income statement?
This is the amount depreciation expense.
Oh, okay.
Okay, is it okay, this part? Is it okay for you all?
Yes.
Okay. So basically we try to identify in the income statement, we try to identify the profit or loss situation, because we know that from the income statement we can identify the profit or loss, and we can see in the income statement total revenue is this amounts, total expenses are this amount. So by considering these two, the difference, by considering the difference of these two columns, we can find out the profit or loss. And in this situation, revenue is higher than the expenses, that's why there is a profit. And with the profit, uh, this profit will affect, uh, can you remember that after identifying the profit, when we need to transfer the profit, or
Balance sheet.
on a security statement, isn't it?
Oh yeah.
Yeah, that means, and in these statements we have shown owner security position into the balance sheet. Now, by the profit, owner's claim will be increase or decrease?
Sir, increase.
Increase. If owner's claim increase, we should debit it or credit it?
Sir, credit.
Credit it. That's why this amount need to be transferred here. Why credit? Anyone? If owner's claim increase, we have to credit it. Why we have to credit it? Because of debit credit rule. Can you remember the debit credit rule? Debit credit rule, asset, expense, drawings. If increase, debit. If decrease,
Credit.
credit. On the other hand, liability, capital, revenue. Just opposite of this one. If increase should be credit, if decrease should be debit. Now, by the profit, owner's claim increase. If claim increase, capital increase, then we have to credit it. Okay, all right. So now, you have done the total of,
I have a question.
yes sir.
Sir, in the net profit, we know that the revenue exceeds the expenses, right?
Hmm, hmm.
So that's not why we are crediting. That's not why we are not debiting it, right? We don't hold that
Because
sir. Okay, my question was that since assets, expenses, and drawings are debited and
Mhm.
liabilities, capital, and revenue are credited,
Mhm.
why don't we credit it because the owner's revenue is greater?
Mhm.
Why are we crediting it by saying that the capital is greater?
Uh, because owners, yeah, because owner revenue is greater, that's why there is a profit. And when there is a profit, who is going to claim it? The owners is going to claim.
Yes, sir.
Yeah, owners
Sir,
is
but
going to. Yeah.
why can't we use that the owner's revenue is greater than the expenses? That's why we are debiting it. Why are we saying that the owner's claim increased?
Because that the economic entity assumptions, can you remember that we always consider that owners and organizations are separate, and we cannot say that this is the revenue, this is the asset of owners. We should say this is the revenue, this is the expense, liability, capital of the organization. So we are doing accounting activities from organization's perspective, not from owner's perspective. That's why we cannot say it's an owner's revenue, owner's expense. That's why we did it.
Okay, sir,
Okay,
understood.
cool. So we identify the profit, and because this is a profit, it will increase the claim of the owners. And if owners claim increase according to the debit credit rules, we know that we have to credit it. That's why we have to transfer the profit into the credit side of the balance sheet. Now make the total of the debit column and credit column into the balance sheet.
So if I find it's net loss,
I'm coming to that. I'm coming to that. Let me finish this part. I'll definitely discuss about it. So now after transferring this information, you now can see the totals debit side and credit side of the balance sheet is same. That indicates the arithmetical accuracy again. So that's how we can also show all the activities from trial balance to balance sheet, trial balance, adjustment, adjusted trial balance, and summarize financial statement, considering the income statement and balance sheet into a single statement. And this single statement is known as worksheet. Okay. And in the worksheet, we should mention not a specific date for the, if it is month, duration is month, then month in date, March 31, 2020. So showing all the activities from trial balance to balance sheet, a trial balance to financial statement into a single statement is known as worksheet. Have you got it? Sir, any opinion from you? Okay. So what may happen? Say a trial balance may be given to you, and after providing this trial balance, they may provide some additional information. They may just ask you to do the adjustment. If they ask you for the adjustment, up to that, gone. If they ask you to do the adjustment and adjusted trial balance, then up to this part. And if they ask you to prepare the worksheet, then up to full part, full of the statements of this statement. That how you need to prepare. Basically, the critical part is the doing the adjustments only. And if you can do the adjustment, you can easily transfer the information here and prepare the worksheet. That's not a big problem. Now, few issues here, as one of your friend already mentioned, that here we found that it's like that.
If expense is greater than revenue,
Yeah,
then
that's the thing. Yeah, that will be the net loss. So here, uh, now, say for example, the debit side is 6590, 6590 and credit side is 4170. হতে পারে না এরকম? Is it possible?
Yes, sir.
It can be. It can be as well. So after transferring all the informations, we found that the situation is like that. Total of debit is 6590. Total of credit is 4170 into the income statement. Then again we have to equalize the both side, because 6590 is higher, definitely 6590 will be the total of both column. So what we need to do here, the difference will be recorded in that situation. So instead of the debit column, we have to write down the difference into the credit column. And what does this 2420 means in that situation? Expenses is higher than the revenue, so it will be called
Net loss.
net loss. Exactly, it will be known as net loss. We will just mention net loss here. We will just mention net loss here. And by the net loss, owner's claim will be increased or decreased?
Decrease.
Decreased. If net loss incurred, that will decrease the owner's claim. So whenever we are transferring it to the balance sheet, which side, in which side will transfer it? Credit or debit?
To the debit
It
side.
should be debited. Exactly. It should be transferred to 242.
Why, sir?
Because rules, if owner's claim reduce, it should be debit.
Yes, sir.
That's why we'll transfer it to the debit side. Then again we'll see the debit and credit are same, not with that amount, some other amounts. But this two will be same. That's how we have to handle that situation in case of loss. Is it okay? Sir?
Yes, sir.
Cool. Basically we have done, basically this is the part of chapter 4, major part of the chapter 4. So we know now know how to prepare the worksheet. I'm just asking you a query. Say for example, in an organization they have two fixed asset, machine with $80,000 and furniture with $50,000, and they charge depreciation on fixed asset.
Sir, I have a question.
Let me finish this one.
Okay, sir.
Depreciation charged on fixed asset at the rate of 10%, for example. They have two fixed asset and they charge depreciation per year, for example, at 10%. So what should be the journal in that case? Depreciation journal is always same. Depreciation expense debit, accumulated depreciation credit. Now question is, should we write all the amounts together or separately? What do you think? No, we have to record depreciation for each particular asset separately. Okay, now for furniture and machineries we have recorded it like that. For this example, they are using the same rate for these two assets, but in other cases you can see that they are using different depreciation rate, expense rate for different assets. It can be possible as well, and generally it's been done like that. So if for the machineries, if you record 10% is 8,000, For furniture, it would be 5,000. Now, whenever we are creating the ledger, that will create confusion. Which depreciation expense will be related to the machineries and which one is related to the furniture? Which accumulated depreciation is related to machine? Which accumulated depreciation is related to furniture? To avoid this confusion, how should we record it? We should record it like that: depreciation expense, machine, accumulated depreciation on machine, like that.
They
Let me
did not.
finish. Let me finish. And for furniture, like that. Accumulated depreciation. And whenever we have to create ledger account, we have to create four individual ledger accounts here. And if you notice, you can see this example the Paul also follow the same procedure: accumulated depreciation on equipment. So whenever you are charging depreciation expense, we should mention depreciation expense on equipment. Whenever you are doing the adjustment, you have recorded it depreciation expense, we should mention equipment accumulated depreciation, like that. So that's how this, whenever you have multiple fixed assets, we should specifically identify what is the amount of depreciation and accumulated depreciation charged on that particular fixed asset. Yes, sir. Now floor to you. What are the queries you have? Sir,
So if they didn't mention that equipment or furniture subject meaning,
definitely they should mention any of the fixed assets if they have. It may be furniture, it may be equipment, it may be building or something else. Definitely they will mention it. But if there is any land, we do not charge any depreciation on land, even though it's a fixed asset, because the value of the land does not reduce.
sir, what is miscellaneous
Miscellaneous expense, I already explained it. Anyone can help him?
So can I help?
Yep, please. Yeah, please.
Oh, okay, Orpila, you go.
You can go.
Anyone, no problem. Yeah, or one by one, you both can explain. Yeah, please proceed.
Like there are multiple expenses in our company, so we can't categorize them individually. So it's called miscellaneous expense.
All right, another one. Yeah, there is another one wanted to explain. Another person.
So basically, what I understood is that there are some expenses which are very small in amount.
Mm-hmm.
So if we try to record all of them, then it will be the picture will become very big. So we
Hmm.
just added all of them up and categorize into miscellaneous expense.
Exactly. This is the appropriate explanation. But Orpita's one was also correct. That you can see that in an organization there are a number of expenditures incurred which are very minimum in amount. Now, according to our rules, we have to create separate account for each of the transactions we are going to make. But these minimum amounts may not have any influence in the financial statement. That's why it has been suggested to avoid this complexity, because whenever you want to create separate account for all the activities, and you have to spend time, you have to spend money as well, because time is also costly. That's why, to reduce this loss for the organization and to reduce the complexity as well, it has been suggested that the activities which doesn't have any influence in the decision making process or into the financial statement, you can sum up all of them together and can write it down as miscellaneous expense or other expenses. And that's why this is basically the miscellaneous expenses. Is it clear to you now?
Could you please explain that again?
Sorry. So in an organization there are hundreds of transactions incurred or thousands of transactions incurred, and there might be a couple of hundreds expenditure for expenditures incurred in the organizations as well. So for example, salaries, wages, utilities, electricity bill, rent, etc., etc. It has a very big amount, these expenses incurred with a big amount. But there might be some expenses incurred in an organization which are very amounts are very minimal or with a very low amount. Say for example, we have spent 10 taka for consuming tea to any of our customers, or 100 taka or 500 taka. So do you think that this 500 taka, if I want to record this 500 taka for these purposes, we have to, according to the accounting policy, we have to create a separate account for that. But the organization which is actually spending maybe 20 lakhs taka as an expenditure, or if they have 200 crore taka as an asset, do you think that this 500 taka is very influential? What do you think? Compared to 20 lakhs taka or 50 lakhs taka or 1 crore taka?
No, sir.
No. So that's why it has been suggested that if you have any category with that minimum amount, instead of creating a new account, you can record all those accounts into a single account, maybe in the name of miscellaneous expense, maybe in the name of other expenses. So what will happen, you don't have to create hundreds of accounts with a minimum amount which doesn't have any influence in the statements, and you can reduce your spending time or spending money as well, or cost as well. That's why it's been suggested that if any such activities incurred with a minimum amount, or if any expenditures incurred with a very minimum amount, transfer without creating a separate account, transfer it to the miscellaneous expense account. Have you got some idea?
Yes, sir.
Okay. So this is how we have to handle it. Yeah, probably Mashur or someone else any had an query regarding any other issue.
Yes. So my
Yeah.
query was like, how did we find out the net profit without finding out the gross profit?
And this is the way, and we'll see the gross profit and other structure or the formal income statement structure just after the meet. So don't worry about it, we'll focus on that issue as well. But as a basic idea, to give some basic idea, this is just I'm giving you a statement, or I'm just going to show you how can we identify the profit or loss for an organization considering overall expenses and overall revenues. But okay, but whatever you try to focus, we'll definitely going to concentrate on that issue, because our objective is to know how can we prepare a formal financial statement. We'll focus on that just after the meet.
Okay, sir. Thank you, sir.
Yes sir.
Previous type of the depreciation through like accumulated depreciation or depreciation expense. What does this mean?
Okay, then I have to focus on the previous session. Have you done the previous session?
Yes.
So in the previous session we tried to explain the depreciation scenario more elaborately. That was our discussions. This organization, for example, had a machine with a cost of $85,000, and when any fixed asset is being purchased, it we also need to estimate some other things. One is useful life, how long we can use it, and what might be the residual value or remaining value after the useful life. That is known as salvage value. So these are the things we need to estimate. Basically, these three things. We need to find out that what is the total cost incurred to acquire this asset, how long we can use it, useful life, and is there any salvage value or not. Based on that scenarios, and there are a number of depreciation method as well. You may find it in another chapter or another course. By following that procedures, we will determine what would be the depreciation per year over these 5 years. So this is the chart we have prepared. This is known as depreciation schedule. This is known as depreciation schedule. This is the chart. By creating this chart, we can show the how we are handling this fixed asset over its useful life. So the cost price is always same for these 5 years, because we purchased this asset with a cost of $85,000. And very simple way to charge depreciation is equal amount over the time. We have seen that 16,000 has been charged for the full year and over these 5 years as well. And accumulated depreciation is total depreciation charged up to date. Say in the year 1 they charge depreciation 16,000, that's why accumulated depreciation 16,000. After year 2, what would be the accumulated depreciation? In the first year they charge 16,000, again in the second year 16,000, so in total 32,000. This 32,000 is the accumulated depreciation. In the third year, what would be the amount of accumulated depreciation? First year 16, second year 16, third year again 16, then 48,000 is the accumulated depreciation. Similarly, what would be the amount of accumulated depreciation in fourth and fifth? We can identify it. So basically, accumulated depreciation means the total amount of depreciation charged on that particular date after a specific time period. And after identifying the accumulated depreciation, we can also find out what is the remaining value of the asset after charging this total depreciation. So in the year 1, we know the cost price of the asset was 85,000. They charge total depreciation of 16,000. So the remaining value 69,000. Cost minus accumulated depreciation. It is the remaining value of the asset, which is known as book value of the asset. In the year 2, again cost price was not changed because we spent $85,000 to acquire this asset. 85,000, and after year 2 we have charged depreciation 32,000. 85 minus 32, 53,000. Like that we can identify what is the remaining value of the asset after each year. And basically we charge depreciation on fixed asset, considering that the value of the fixed asset reduced with its consumption or used. But in accounting, we do not reduce the value of the asset, but somehow we have to reduce the value of the asset. That's why we created this accumulated depreciation account. So whenever we are charging depreciation, the journal entry for depreciation is always same: depreciation expense debit, accumulated depreciation credit. If you are in year 1, depreciation expense debit, accumulated depreciation credit 16,000. Year 2, again depreciation debit, accumulated depreciation credit 16,000. That's how we record the depreciation journal year by year. Now in this session we mentioned that uh, uh, how should we handle the depreciation for multiple assets. That's how we have to record the depreciation for multiple assets. So we have to specify the amount of depreciation expense for that asset has been how much is been charged, and also how much of the accumulated depreciation also been recorded for that particular asset. This is how we have to record the depreciation. So does it make sense to you?
Yes, sir.
Okay. Now one more thing, why should we call it as a contra account? It was a query from some of your friends as well. So basically I'm supposed to discuss about it when we are prepared the formal financial statement, but before that I have to give you some idea. We know that we have to transfer this um, fixed asset account to the balance sheet, and whenever we are preparing this balance sheet, how should we record this asset? The asset should be recorded like that: asset minus accumulated depreciation. Similarly, for furniture, like that. Say machine, the value of the machine according to this example was 80,000 minus 8,000. So the book value would be 72,000. Similarly, for furniture, the value of the furniture was 50,000, depreciation was 5,000, the value would be 55,000. So whenever we are going to prepare the formal balance sheet, the depreciation will be shown like that. That in the balance sheet's asset side will show the assets minus accumulated depreciation. Asset minus accumulated depreciation. The cost price of the asset, then accumulated depreciation. Cost price of the furniture minus accumulated depreciation. So cost minus accumulated depreciation. What does it called? Cost minus accumulated depreciation. What does it call?
book value.
Book value. In the asset, in the balance sheet, we always record the asset with their book value. We always record the assets with the book value. And because we do not reduce the value of the actual cost price of the particular asset, how we are reducing the value? By creating a separate account which is known as accumulated depreciation. This is why this accumulated depreciation account is called contra account. This is a contra account of that particular asset. This accumulated depreciation on machine is a contra account of this machine account. This accumulated depreciation of furniture is a contra account of this furniture account. Why? Just to reduce that value of that particular asset into the balance sheet. Just try to remember that one. We'll explain, so we'll work out with that issue later on after the meet. You don't have to work out with that issue at this moment. Just keep in mind that we will present our fixed asset like that into the formal balance sheet. Is that okay? Whatever we have discussed today. Hmm?
Sir,
Okay. So in the next session, I'm going to suggest you to solve a problem.
sir,
Yes, sir.
as there will be no classes
Sorry.
next week.
Sorry, sir. Yeah, there will be no class on 9th. There will be a class on Monday.
Sir, can you show us what mistakes we committed in the quiz so that we can rectify it?
Yeah, we'll discuss it on next session. Okay. Just remind me in the next session.
Sir,
Yes, sir.
the chapter titled Completing the Accounting Cycle is that chapter 4.
Yeah, this is the chapter 4, the worksheet 1 we have done today. So I am suggesting you to prepare a worksheet with this problem. P36A, page number 169 or 168, whatever you mentioned. Sorry, of PDF. So this is the homework for you for the next session. P368, PDF page number 168. Prepare the adjusting entries. You definitely have to do the adjusting entries for preparing or completing the worksheet. Okay. Any query from you? Any of you? So, all right then. If you have no query, we can complete our session today here.
Sir,
Yes, sir.
I actually have a request.
Please.
The format of the worksheet and the depreciation schedule, you wrote it in section 9B.
I'll transfer it. No worries about it. I will definitely will transfer this discussion to the section 3 worksheet spreadsheet as well.
Thank you, sir.
No worries.
Sir, I also have a request, and that is like when we give quizzes on bugs, can you please enable the option which allows us to submit more than once? Because
Uh,
sometimes we just submit one and time runs out. But probably it can happen that we might change our mind. So
so it is not in my hand. It's an you know that there are about 9 sections, and it has been controlled centrally by with a group of faculty members. So it's not basically in my control to change the policy at this moment, but because this policy has been used over the semesters. So what can I suggest you to make the save first, not to submit? If you have any confusion with any answer, just save it first, and later on make make the submissions.
So in the previous semesters, it happened with me that I did not submit, but the exam time got over,
Mhm.
and so I lost the marks even though my answer was correct. So
So what happen if you save it? We can grab it. If you fail to submit, and if you save the answer, uh, uh, whenever we are going for the manual checking, we can grab your saved answer from your portal. That's why it's been always suggested before submitting, save your answer first. So if you save your answer, you'll not face such problem. So whenever you are going to see that I am not evaluating one of your responses, then if you tell me, I can grab your response from your portal which has been saved there.
okay, sir.
Okay. So
Yes.
try to save your answer. That's what has been suggested into the instruction as well. If you forget to submit, it doesn't matter, but definitely you should try to save your answer first.
Okay. Thank you, sir.
All right, sir. Thank you everyone. See you in the next session. And by this time we only have one session. You might have different problems. Feel free to raise those problems into the next session. We may discuss, or we may spend more time to discuss those. Yes, sir.
We have to either syllabus up to week 6, session 1.
Up to next session. Yeah, up to next session.
So I was asking about BUX content. So is that syllabus up to week 6, session 1?
Yeah, yeah, yeah. Just follow the topics we are covering. That will help you to understand. Any other query? All right, then. Thank you. Thank you, everyone. See you in the next session.
Thank
Sir,
you,
we will
sir.
be receiving a recording of this class.
Yeah, I did this recording of this class.
Thank you, sir.
Thank you. Thank you, everyone.
Thank you, sir.
Thank you, sir.
Thank you.
Thank you, sir.